Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream is about integrating Bookmap Orderflow tools with auction market theory using a volume profile in the intraday developing time frame. The stream is based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars that explains this process. Now, today is the October 9th, 2024, and we are making new all-time highs. I'm going to go into the structured trades that might have allowed you to participate. And of course, past performance is never indicative of future results. However, I do believe almost anyone can learn how to trade if they do the work, have the tenacity and the capacity for it, and also differentiate as far as how they approach this from a business point of view. This is a gaming business. It is not a predictive business. And there's a big difference between predicting what's going to happen and just looking at this as gaming or a statistically based business. That is what the Trader Lab is built on. It's about helping traders understand the business of trading and potentially creating a career path of sustainability in this business. And while this business is definitely not for everyone, it certainly can be done, and it just has to be put in the context of what does it take to become a professional and a high performer in anything, whether it's industry, sports, you name it. It takes excellence. And how do you create excellence? First of all, you need good education, you need mentoring, coaching. I believe you need to be in a community of others who are in the same position you are developing. I know for myself, we were just discussing this in Trader Lab, this is a lonely business because while we want support from our family, our friends, nobody can understand what this business is. You cannot describe it to them in any way they can relate to it. So they just think you will not be able to do it. So where do you get support? Well, that's what the Trader Lab is about. It's a community of like-minded traders who have come together to leverage their collective experience, and it's an accountability piece. It is also a support piece, and there's a lot of participation. And it doesn't matter how you approach this business. What it does matter is that you understand it is a business, and it should be managed and experienced as a business. Now, the thing that gets us, and I'm going to go into today's trades, is the randomness, the uncertainty, the emotional triggers that keep us from even following a basic plan if we even have one. The nature of business is plan, execution, and in this business, statistical probabilities in a completely random environment, based on my opinion anyway, and my experience and potentially the experience of many others. And you can come to Trader Lab, and there is no cost. If you're in YouTube, there is a link down there. You can access the Trader Lab and all the resources, not only of Trader Lab, but the Bookmap Discord server. And there's a lot of additional education. It's all at no cost. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Grab a pen and piece of paper, guys. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks, Stephen. Okay, let's get going. Now, this is Bookmap. What is this stream about? Integrating Bookmap, which is a high-tier order flow product with auction market theory using the volume profile. So they're going to show you multiple components and what we think of as time frames, multiple time frames. Now, just to clarify, and I have to repeat certain things here, I don't use any time-based indicators. In fact, I don't use any indicators. What I use is information. And the difference between an indicator and information is participant behavior. The quote information is based on the order flow. That is kind of the tip of the spear. Then if we go up in time frame, we're going to overlay this participant behavior on top of structure as it develops. The other part of this is by using order flow, we can see as immediately as possible changes in behavior. That's the point of having an order flow tool, is to get an edge over other traders. Now, let's go take a look at a couple pieces. Now, this is still the ETH. It's 8:26 Central Time. RTH is 8:30 Central Time. That's the RTH open. But I want to go over some levels. This is the ETH high today. This is yesterday's RTH high. This is a target coming up. It's 58.11. It's a high volume area. Think of high volume like shopping. Trading is like shopping. In case it's not this mysterious thing. It's really, I'm going to say, not complicated. And you're going to say, how can you say that? I'm going to say it is not complicated. Here's what it is. It is random. That creates in our minds complexity. But randomness is the problem for us. The randomness of the rotations, the randomness of news inputs, somebody tripping over the cord at the CME, all of that is random. So the rotations are random, and that's what really is problematic for us. Let's go a little bit higher here. All-time high, okay? So we're opening up here, all-time high, yesterday's high, ETH high. Now, here's a little bit more. Yesterday's highest volume price was around 98. Again, high volume. What is high volume? Retail. Think shopping. You buy a can of tuna, it's $1. Sellers sell it for $1. You buy it for $1. That's the fair price. Now, and this is in yesterday's RTH. Now, in the ETH from today, this is the fair price. So the last auction is the ETH. So overnight volume point of control. And there's over 80% probability-ish that we'll get here. Overnight mid, around 80% probability we'll get here. Past performance not indicative of future results. I'm just taking these stats off the top of my head. There's actually a stat sheet in the Trader Lab if you're interested in stats. So 80% probability we get here, about a 70% probability. Now, it doesn't matter. Remember, these are just ballpark ideas. Roughly 80% probability-ish we get there. Maybe it's in the 70s. Don't care. I think this is stale. Somebody will let me know. So now let's get into the before the RTH open happens. I wanted to show you something. And now I'm going to be talking about structured trades. I'm also going to mention a couple of trades I take that are not structured. And that's not a recommendation anybody do anything. Because in case you haven't noticed, all traders take stops, right? So I'm certainly right there with everybody else. I take stops. Of course, like everybody, I'd like to have less stops and more opportunity for profit, but some days, we don't make money every day. Some days it seems like, gee, this is so easy. Other days it's like, why can't I find a winning trade? What's the difference? It's that uncertainty and randomness. So right here, 58.05, 2 minutes before the RTH open. I'm looking over here. I mean, I'm just hanging out and I'm sitting here and I see we making the overnight high. Okay. And it's at a level and yesterday's high is here. What's the yesterday's high? Well, if we had any sellers in here, there might be buy stops above it. So I know yesterday's high is on the hit parade. I also know since we're opening, I don't know that yet, but I know since we have the ETH high and yesterday's high, there's going to be stops up here, and I know I want to be long. Now, you're going to say, wait till you hear what comes next. And by the way, if you have questions, post them. I'll get to them as soon as I come up for oxygen. Right here, I see ETH high, and I see selling, and it's right here. Right here, I see absorption. Now, I'm going to show you these things, but I'm giving you this because I want you to see what trading in fractals is. Now, this is not a structured trade. So selling is here, selling is here. So I'm seeing a down leg. So when I see this, I'm thinking to myself, well, this is high probability, this is high probability, but the market is long from yesterday. So I'm just going to show you a trade I took, and I'm not saying it's a good trade. In fact, thinking about it, I'm going, what were you doing? But that's neither here nor there. I always ask, after the fact, things are very clear in trading. And you can't beat yourself up for doing what your plan says. You can only, in my opinion, beat yourself up if you're trading without a plan. Then you're just a gambler. But right here, so I have my buyers came in here. This is still ETH. So a buyer took the other side. Right here, there was absorption. This is the absorption detector. So buyers were assuming the seller. So I see here the buyers. I'm going, oh, okay. We break below. That means down. Okay, down. Now I come into RTH open. It's right here. Market opens, and I'm thinking continuation. So I take a short. Let me show you. Now, this is not a structured trade. At least it could be, but I'm only mentioning it to show you what I was doing. Now, this has a high probability. Remember, in the overnight mid has a high probability. So I figured, well, we're going to get some longs out, and then I'm going to look to get, in other words, I'm going to take a short, get rid of some longs, turn around and get long, and then start going for the upside targets, which have high probability. And I'll get into some of that. So here's where my short was. And then I'm going to get right into the longs. Just showing it to you because this is kind of what trading is, because who knows? So I get my open. This is a developing volume point of control. In the profile world, what it means really is the current high volume. And as the volume comes in, and it starts at 0, when the RTH open, it resets, then I'm seeing the volume and the yellow lines like your can of tuna. What is the price of an S&P here? What's the price of an S&P here? What's the price of an S&P as the volume comes in? And think about it. If you go to a store and the price of tuna is too high here, now we're in micros here, pennies. Think of it that way. So the store doesn't change its price, but our price is changing all the time. And I call that fractals, because in a fractal, we could be in a couple seconds or a couple of ticks. In the store, it's a much higher time frame. They don't change the price much. Okay, but it can get too high and you run out of buyers and it can go on sale. And then the sellers aren't going to keep selling it if there's demand. And then we come back to the retail price. So in micro, this is retail. So what I see is, now right here, sellers are here. Here's micro, high volume structure. Right here, I break below it. Sellers are in control. I come back and check it right here. Too high, because my sellers are here. So if I'm below the sellers, that means they might be in control. If I come back up and check these guys, by the way, what happened here? Why didn't we go up here? Because the sellers are here, passive side. What happened over here? The buyers are here. There's the buyer there, passive side. Sellers, buyers. We break low. Sellers in control. I'm below that buyer, and now I'm below these sellers and the buyers that were here. Here, sellers are here. VPOC is here. Buyers are here. Take a shot at this. Too high. Buyers are here. Too high. Break low. Sellers are here. Buyers are here. Resistance is here. Too high. Short. Now, this is aggressive, and this is really an advanced process. Target is here for the scale. I actually got scaled a little bit lower because my entry, by the time I get in, I'm getting in over here. So it's very tight, and I'm going for the overnight mid. And that's all I was trying to do with this, is get there. Okay, so that was my trade. And I said, well, I can do that. That's got enough meat on the bone and a little scale. And if I got here, it would be a roughly a 8.9 9-point trade. I can live with that. Now, let's watch. All this is saying it's going down right here, going down. And this is called VPOC migration. Going lower, going lower. What this is saying is, I'm not paying that. I'm not paying that. You got to be kidding. I'm not paying that. Down. Now, right here, we come across. This is resistance. We have mid and VWAP. Resistance. This is resistance. Watch. We come down here. So far, so we got to the VWAP and we got to this. This is a variable high volume node. In fact, I've got to label some stuff here. Hold on, guys. I got to do this because I'm trying to speed along. I call these variable high volume nodes. And all high volume is, I made up terms for this. When I started doing this, it was a long, long time ago. And I started labeling these because what they represented to me was shopping and pricing. And think about what our market is. It's not made up of your indicators and timeframes. It's really made up of participant behavior. So what I do is, since I don't use indicators, I speak a language. I've learned the language of the market. And it took me, obviously, a long time to learn to speak market. Because, like you, early on, I was, classical bar charting and then indicators and then systems. So I developed over many different iterations of market understanding. And every time I thought I understood what was going on, I really didn't. But I believed I did, so I would persist, even though I did not have an edge. But because of randomness, and everything works at times, that's our problem. We think we're doing the right thing. And it might be the right thing for some traders. It certainly wasn't for me. But I kept coming back to the same problem. So as I'm going down, this is the shopping price. Remember, this is like a supermarket. And I am going here. Remember, that's my target on the trade. So I do a couple things. I take the trade, I get risk neutral, subject to my plan, and I manage the trade. Then after that, whatever happens, happens. It's not my job. So where am I? This is too high. This is too high. So this is resistance. So I'm looking at this and I'm going, well, where does this thing fail? Well, it has to come back here. And I also posted this in the Trader Lab, by the way. I do post quite a bit if I can. And this is the opening swing high. We got which is settlement too, by the way, opening swing high. And this becomes important because the opening swing high, what's at the opening swing high? Stops. Whose stops are opening at the opening swing high? Well, me and everybody who's short in this leg, and maybe the guys who are short from up here. I mean, if I was paying attention, this would have been a short into the open. But, I just basically picked it up over here. So I'm on the same trade from up here, but I only put it on up here. Just so you know. So I can do that. You can do it. I'm not saying anybody should, but you can. Now, here is where things change. So right here, everything is still okay, and it's okay over here. So I'm just sitting. I have my stop back here. And I know if I come across here, then the opening swing high is here and there's stops. So, and there's this right here too. So I am guarded because I'm going for this. And if I get it, I'm done with the short. And I'd be thinking about getting long at that point, but not so much. So let's just watch. Here's a change. Now I have now crossed above this. This sets up a couple possibilities. Here's what they are. One, we're done. That's a possibility. The other one is we rotate outside and then we continue lower. That's the other possibility. That's the possibility. So let's look at the possibilities. Where's resistance? It's right there. This was my variable high volume node. The other thing I know is I've got my opening swing high, and there's going to be buy stops. So let's look at the behavior right here. See? So this, now here's how you might look at this. This is resistance. This is the target. And the opening swing high is here. So subject to your plan, if you're in Trader Lab, this can be a short to here and then out the bottom to there. Or you cover and you're done with the short and now you're waiting to see the reaction here. Two possibilities. This is a structured trade in the Trader Lab. Not talking about what I was doing. Okay. This is structured trade. Now, there's two components to this. Remember, when we cross over, it could be done, or it's called mean reversion, which is outside in. This is Trader Lab. Now, it's up to you what you do with this. There's no right or wrong. I mean, winning trades, losing trades is not right or wrong. Right or wrong is your plan. That's how you grade yourself, not one trade. Now, we know the opening swing high is here, very vulnerable. We know that the trend is up, and we know we're near all-time highs. That's what we know. So resistance. So right here, I'm going to show you a trigger. Not necessarily, I mean, this is a Trader Lab trade. Now, whether you take it or not, that's your business. Resistance here. Microstructure is here. Here's how you read this. Passive side is here. Buyers are here. Micro high volume is here. I'm just isolating this so you can see it. Now, there's no way to know. What do I know? The shoppers said, I'm not paying that, and that's why we went down. If I come back to a price, think of this like shopping. You go to the store, and the can of tuna is $1.50 up here, and you know it's $1. It should be $1 in your world, but up here it's $1.50, and we come back, and the sellers raise the price to $1.50, and we run out of buyers. I'm not paying that. Now, you know, if you got to have your tuna, you might pay it, but we run out. The sellers are here. This is a trigger. We pull back to the micro high volume structure. And the variable, now I'm in fractals. Variable high volume node is there. Microstructure is here. Break low. This is now resistance. This is a potential short. Let's watch it. This is your scale, because this is what? I'm not paying that. Where's the retail price? It's here. So mean reversion is outside in, and then theoretically lower. And we get here, okay? And then what do? Outside in. Now, let's take this one piece further. What do we know? We know the following. This was too high, and the opening swing high is here. Now, what do we have in this leg? And what do we have in this leg? We have buy stops here, the opening swing high. We have buy stops here. If I come down and I don't get to well, it doesn't matter wherever we get, but if I get my absorption here and I have a micro high volume structure here, and I come across, then the potential is to take out everybody who's short. And I say the word potential because that's all you got. Now, as soon as we get above here, you're going to see something interesting. As soon as we break this, that's my long. So I did not get long until here. And I took it on the way. You know, as soon as it comes here, there's two places to enter here. You got this, and you have this. Let's just see. Notice, watch. This is the long in the Trader Lab. This is a long in the Trader Lab. So what you got is this. Once it comes out and it runs and it breaks, then you have, so you got the stops, you got the shorts, Here's your entry. This is a structured trade in the Trader Lab. Or here. I don't remember if I got long here or here. Can't remember. But I got long. And all this is posted in Trader Lab in the community. Now, what are we going to do with this thing? Now what? Opening, I'm sorry. I got long here. This was my next target. And then I'm going for yesterday's high. If I didn't get long here, I'd be long here, coming back to this. Let's look at the structure together before we get there. So you get this, it's either long here or you missed it, and there's the weeping and gnashing of teeth, which of course we all feel. That's emotions. Let's look at the structure. So right here, we have iceberg selling all the way up. Looks like it's just going to the moon. And we all get depressed because, oh, I'm not on it, right? And then FOMO sets in. I got to get long, I got to get long. Well, if you're in Trader Lab, the smart thing is, no, you don't have to get long. You have to wait for your trade. That's the business. So right here, I see my buyers, and as far as I know, why would it stop? Yesterday's high is here. What happens here? Seller, buyers are here. This buyer, these buyers here, and you don't know this until hindsight. So, hindsight, yeah. They were absorbed by these guys. And you can't tell. Why wasn't it here? Look at the seller. Well, no way to know. Buyers are here, sellers are here. If I don't take this buyer out, then these guys, even though there was selling here, the buyers are still consuming them. Think Pac-Man. It's a good way to conceptually. And this is also absorption. See the red bubble with the green box? That's absorption. That's buying icebergs, 1400 right there. So up, 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 get a seller here, absorbed. Sellers are here, buyers are above, going to the moon. Up here, going to the moon. What happens? Sellers below. Now what? I got to clear this to go higher. What happens here? Seller is below this buyer, sellers are here. The sellers are now below this buyer, these buyers over here. I come up. Now right here, watch. So I know I got sellers here. And now I have no idea what it's going to do. Don't think I know, because I certainly don't. Sellers are here. Buyers are here. And then sellers are here. So I got seller, seller, and sellers are above here because of the absorption. This is absorption. This is more absorption. Now, I'm right at yesterday's high. So, what now? Let's watch. Now, I have other targets. By the way, I got to give you some targets. I forgot all about this. This is a target. I posted this in Trader Lab. 58.11 and then 58.20 was another target up here. And that's resting liquidity. I don't know if you can see it here. It's actually sitting there. And 58.20. All these were posted in the Trader Lab. And then all-time high and whatever. After that, we're in Twinkie land. So this shows a short. Now let's watch this. So we took out the opening swing high. We got this. And there's over 80% probability-ish, past performance not indicative of future results, will either take out yesterday's high or low. Don't know about you. I'm kind of leaning to the north side. So this shows me right here the possibility of a counter rotation. And I want to show you the structure because it's individually, in the sense of this is individual plans in individual time frames. Let me just draw a little box here for you. I will take all of this off, but I want you to see how you can read the language. So this is, if you want to look at this thing, if you look over here, this is the volume and this is a distribution of volume. What it is, a consolidation is what it is. Now remember, yesterday's high. We want to get through yesterday's high. So we're very enthusiastic for that. This shows a potential counter rotation. Now in the Trader Lab, we have other trades, other longs. Let's see if we can identify them. So this says going lower. So here's the choices with this. Trade management opportunity. You see this, you exit your long, or nothing. You see a counter rotation and you fasten your seatbelt and you go, well, if it takes out the low here, then it's all over. And you're positioned. What is your plan? What is your time frame? We pull back to VWAP. And what else? Too high? VHVN, remember? This was the triggering structure off the VHVN, which is there. This was that short if you were taking shorts. Where do we come back? Let's just scrunch this back right to the structure for the short, which was leaning on this VWAP. This is a long in the Trader Lab. Where is resistance? It is here, because that's where our short's set up. Notice. So I did, and I'm just saying, just me, not saying it's good. There are better traders in Trader Lab than me. Long scale. Now, looking for this and then out the hatch. Let's watch. Resistance. Notice the behavior. Is it coincidental? Why did I point this out to you? Because this is a selling structure. Break low, pull back here. The sellers are in control. The buyers absorbed here, and we're below them. Pull back to the buyers who were run over by the sellers gives you the rotation. Pull back to the location of the previous short and the VWAP gives us the long to come back here. Can everybody see that? Does this make sense? How are we doing in YouTube? How are we conscious? Is this making sense? Tiger Williams, the VPOC adjusts all subscriptions in Bookmap have the session volume profile, and the point of control shifts with the volume. It's in all subscriptions. This is the Global Plus because I execute off of this. So, and you can execute right on the screen. And just go to bookmap.com. You'll see what's included in all the different subscriptions. So, long scale. Watch. So now what? Let's just watch. Where's support? Isn't it here? And why might this be support? Let's get into the language of the market. Remember, I don't use indicators. I have to do something else. What do? I read it. This is what order flow is about. It's what does it say? It's not red bubble, green bubble. It's what are the bubbles? They're delta. And what does delta tell us? The aggressor. Who are aggressors? Sell stops are aggressors. They become market orders. So if I see a red bubble, that doesn't mean it's yet short. It means the sellers are here. And then what happens? Well, if I see a move like this, when I see sellers, that tells me the buyers are here. If I break high, and don't forget where resistance is, and I'm not getting back below this location, this is why I put these lines on here, and it's where they come from. What do they mean? It's language. If this was resistance back over here, I take it out and I pull back here. Isn't this a long? And isn't this resistance? That's why it's a target. Then your stop stays under here, or whatever your thing is. It's your plan. Notice the resistance. Why does the market stop here? Because the buyers got taken out over here and the sellers took over. So that's resistance, isn't it? Now, look, we take them out. What does that do for us? Overnight high, yesterday's high. So for me, this is the long, that was a long. Let's go a little further. Sellers are here. What was our resistance? Let's remember resistance, resistance. VPOC migration, let's label it. This is a continuation opportunity in Trader Lab. We're variable high volume node. I got to label that one. And this is process. So what I'm showing you is process. So this says this is the new retail price, and what's below, which is this, is too low. You can't buy it here anymore. So where's the new price? Price of tuna is getting expensive, don't you think? Well, here. So if this is too low, then I can go higher. My target is 11-ish. I say ish because that's about as good as I get with this. It's like maybe in their areas. This is what levels are from. This is based on when the last time we were up here. So it's high volume. High volume is like a price check in aisle 3. Let's go see. Is that price too high? VPOC migration. Tuna is getting more expensive. Target. All this is posted in Trader Lab. And I invite you to the Trader Lab community. If you haven't taken advantage of it, well, it is available at no cost. There is a link in the bottom of YouTube. There's 60 PDFs. Notice the VPOC migration. Prices are going higher. How high? I don't know. Where's it going to go? I don't know. Let's see. What am I going to do? How do I deal with this? I have a trade management process, and I know as this is going up and it's supporting the higher pricing that it can continue to keep going somewhere. Now, the somewhere is part of the thrill. Where? Now, another piece for you guys. At 9:30 Central Time, my time, which is there, the current high of the day at that time is called the initial balance, either high or low. So it's the first hour's high or low. Well, we know where the first hour's low is. It's currently the low of the day. There's over a 90+% probability we're going to take out either the first hour's high or low. If I know that I have over a 90% probability of taking this out, and I know the all-time high is here, do you think it might make sense to be thinking longs? Now, it doesn't mean you can't take a short. It means if you do take a short, you are counter trend and you're standing in front of the advancing army. If you do, so the idea is the following. If the context is up, the trend is up, you have choices. You can use short trades to exit longs, but not fade, or subject to your plan, you can take a counter trend trade, understanding that you are with what's called a counterattack against a stronger force that's advancing. All that is subject to your plan. So in Trader Lab, with context up, the structured trades are continuation trades and trade management. Shorts are either exits or your stop is way away from the noise. That's up to your plan. Let's come back now. So higher, 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 over 90% probability. The current, that's at 9:30 Central Time. It's called the initial balance. We have two trades that can set up here. One is called the IB failure, which is a mean reversion trade. However, there's the mean. And the other one is called the IB continuation trade, which is a long for higher. And remember, we have liquidity sitting 58.20. That's our next target. So let's watch. IB high is here. Very important. Watch. We break the IB. Now there's two trades here. One is the IB continuation. So there's your break, over 90% probability. Pull back here. Now, you can do the following. You can get long here, or if we fall inside, and we don't come out, then we can mean revert. So two possibilities, okay? So let's watch. Remember, 20 is the target. This is the IB continuation trade right here. Let me show it to you. These are all structured trades. These are available in those 60 PDFs. I show them every day here. These are structured trades. Now, the thing in trading is, what separates today when everything seems to be working really nice from the other days where you're just, no matter what you do, it's just not working well. You're taking stops, you're frustrated. What is the difference? The difference is randomness. So let's look at this. I'm going to take you now to micro. I just want you to see a little more of this. So this is too high, right? You can see the high volume here. It's right there. This is the retail price, the VPOC it's called, volume point of control, which has been moving higher. Everything says the pressure's to the upside. Basically, what this is saying in the auction is that the buyers, the participants, are willing to pay more for the tuna, or in this case, the S&P. So as long as we're moving up, if I counter rotate, remember how I use these, this might be a place to get long. This might be a place to get long. This was too high. That was my counter rotation. Notice where I came back here. I tested this. Too low. That's also a potential long in the trader lab. All of that's up to you for a continuation trade. And your resistance is here. Notice where we come. Just pointing it out. So here, VPOC migration, potential long. Just saying. Now let's come back here. And why? That was too high. That's too high. Resistance, support. Watch. Resistance, support. Break high. Pullback. Where's support? Here. And where's resistance? Here. Break high. Now, IB continuation trade. Long in the trader lab, and it's right. It could be here or the break high. The pullback is to here, which is the location for the long. Let me show you the microstructure. Now, if we go in here, you can see the behavior. So remember, this was too high. There's my rotation. The sellers are here. Here's the buyers. They got thrown under the bus. Microfractals. Resistance, resistance, support, resistance, ping pong. Right here, buyers are absorbing the sellers. Right there. Break high. Sellers are here. Stop sweep. Okay, now where to? Pull back to the IB. Where's my support? It's there. There. See it? So here's what. This is my location. I can buy it here. There's my absorption. And let's look. Buyers, 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 seller here. So the way I look at this is there's sellers here, but they were absorbed. So the buyers are here. Sellers try here. Why didn't it go down? The buyers are there. Off we go. Having a wonderful day. Sellers are here. Okay. Why not? Sweep. Counter rotation. Let's come back. Where's the buyers? Here, here, here. Buyers are here. Sellers are there. Buyers are here. Sellers are there. Sellers take control up to here. And where's my buyers? Here. If the market, if the participants perceive this as a long, if we come back here, is it possible we might see them again? And the buyers who are shopping down here in their local store see it come on sale and they perceive that it might go higher, they're going to buy it. When this guy gets absorbed, which you won't know until you're above this, it's a long for the IB continuation, next target being 20. Okay? So this is posted in TraderLab. 20. So for me, this was my next target. Now there's more. Now there was somewhere in here liquidity, and I posted this. There was a continuation trade somewhere in here. I think it was 20. Guys, can you look at the chat? Tell me where I posted the about that liquidity. that set up a continuation trade? Anybody? It's up there in the 25. Is that right, guys? 20? Oh, I don't think it was 20. 20? Was it? Okay. Yeah, I'm not going to switch over. I believe it was 20. And 20 was resting liquidity. Right, it was. Thank you. 20. Okay. So this is an advanced concept I'm going to share with you. And it's in the 60 PDFs that are in the Bookmap Discord Trader Lab, which is available to all of you at no cost, and a library of webinars. It's a long, and it's a continuation trade. Now, so coming up, this liquidity, which was resting in the book, and this is how you can use not only order flow, but how you use the limit order book. Resting liquidity means something. Algorithmic behavior is just what it is. It's whatever. They pull, they add, they push and pull, all this. Different. Resting liquidity at a strike price means something. So so this is a target. Now let's look. So the last long is here. You would get risk neutral if you're in Trader Lab, and this is your target. Now for me, I'm just going to say this is a target. Now I break through here. Now this is all posted in Trader Lab. You guys are welcome to the Trader Lab chat. You can just see all this stuff. It's all in there. Now I don't call trades because why take my stops? You take your own. I take stops. Everybody does. And so I don't call trades. You got to kind of figure out what works for you, and that's the work side of this. So right here, the liquidity is here. It's my target. I see a sweep, and I see sellers. We break through it. This sets up a continuation trade, and it's an advanced process. It is in those PDFs, and you have to reverse engineer this. It's not mechanical. Nothing I'm sharing here is mechanical. The structured trades, as far as where they will show up, you can identify them. What has to be in alignment is the context. So certain trades qualify under certain conditions. In other conditions, you'll come to the same location and the trade is not on the table. It's not qualified. In fact, you might be doing the opposite. So there's more to it. There is no black and white plug and play in trading. And that's because of the random nature of it. So this breaks through. So there's a scale or an exit. And now we pull back. This is a long in the Trader Lab right here. Right here. So I took this one. Not saying it was a good idea. Take it, get risk neutral. And don't forget, what do we have above us? You do remember, don't you? This. And then it's just trade management after that. Because you're up in the ether. What are you going to do with this? So let's look at trade management. Now, 20 is in those PDFs. You need, I think, and all this is, it's kind of like waiting for you. If you do the work one piece at a time, you can do this, in my opinion. Now, there's a lot more to it in the sense of emotional management. I think ultimately anybody can learn to trade if they have the capacity and they do the work. Whether they can trade is a matter of converting what looks like randomness, because it is to a certain extent, into metrics so it becomes tangible. When it's tangible, now you can manage your fear, and we're all scared. If you don't admit it, then I think you're not being honest. The fear aspect of this is the uncertainty. Uncertainty triggers a fight and flight response. So we're constantly in a state of uncertainty, so in a constant state of fight and flight. That's just the way it is. You don't have to take my word for it, but if you've been trading for a while, I think you've become familiar with it. So anyway, here's the long, and then it's just trade management. What I do is I go behind fractals. So I just go behind and just let it take me out. That's the end of it, Takes me out. Wherever it is, it is. So you'd be out. That'd be the end of it, So now let's look at this. How do we know where the high of anything is? How about we don't know? So if you're in this long or not, where's the high? I can't tell you that because I don't know. Why isn't this the high of the day? Why isn't this the high of the day? Why is this maybe the high of the day? Or at least up until the FOMC minutes come out, which is 1 p Central Standard Time. Who knows? I don't know. So I'm seeing stop sweeps in the sellers. You see the absorption? So we're getting icebergs are selling this all the way up. That's absorption. There they are. And there's buying icebergs too. I mean, it's just going. Stop sweeps, icebergs, sellers, no way to know. Here's where the sellers are absorbed by the buyers. Here. Buyers are here, sellers are here. I'm also seeing the absorption there. So there's a cluster of absorption. You also got it here. That's why this was a question. Break above it, support. Sellers, going to the moon. Right here, we have our buyers under here. That's why it went up. I see we just pulled back to all-time high. That would be a potential long, by the way. We'll talk about that. Break low. So the long is over here. Okay? And you wouldn't know until it is. Now, it's not a short for me. It could be a short if that's in your plan to try to pick the high of the day. I'm not very good at that. In fact, I don't do it. I just trade manage and let the chips fall. Let's look at this. Pull back to all-time highs, like pulling back to, the yesterday's high. It's the same thing, and the potential is to fall back inside, right? So right here, let's look at this. Now, this could be a long or nothing, or you could just be in your Barca lounger, hanging out, having brunch served. Sweep, sellers, location, icebergs. Let's just look. I'm going to take you to microstructure. Now, this is not, if I was sitting here, I wouldn't necessarily be taking this trade because for me, I'd be fine. I just don't, I'm kind of I have no sense of, gee, I gotta. I've spent too many years going, oh, I got to get this. I got to get that. I could have done this. I could have done that. I just go, I don't care. Because this is kind of not necessarily a structured trade in the sense of it is really more of an anomaly when you have a breakout and you're at all-time highs and then you're coming back. But testing any high often is a support and you can get a reaction to it. So anyway, I'm just going to narrate this for you so you can kind of see the structure. So let's come back here. Where's our resistance? Let's mark this out. High volume is here. High volume is there. I'm going to start. I'm going into fractals. And then I'm going to come up and look at questions. The volume is down here, right? Whoops. Let's get back here. So the possibility is to come back up here, this area for a test. And this is not a trade I would take. I'm just going to try to show you some structure. We didn't quite get to the all-time high. So it's still possible we're going to rotate down. So, and the market is long. So there's a lot of fuel under us, sell stops that are trailers. Okay. So resistance comes here. So we have some resistance there and there. And of course, right now it's here. So we got to see if we can clear this, then we got that. If we can't get above this, then we can come back here. Any questions now? I'm going to come up. I need oxygen anyway. And thanks for visiting the Trader Lab today. $20. Okay. Guys, do you have questions? By the way, there is a free version of Bookmap, digital version. You can access that in the at bookmap.com. Plus, you can see, the different subscription packages that are available. But I think the term is no cost is good. If you want to get your hands on this, you can kind of play around with it a little bit. It is set up for Bitcoin, and you can kind of look at it and think about how you might use it. What's really different about Bookmap, I find, is I want to know what's happening here. I'm not interested in getting long here. I can tell you that right now. If I was going to get short, it would be like against a level like this, not down here someplace with what a lagging indicator. I mean, let's think about it. And I always want to say I'm not against indicators at all. What I find is most retail traders spend their trading career going through their software toolbox with all the quote indicators, looking for the right indicator, the right time frames, right? That's pretty common. And then when it crosses over, you do this and that and all that kind of thing. And then is the assumption that somehow that creates an ATM in the basement. Wow, never did for me. Now, the thing is, those processes would have strings of winners also. So it kept me kind of looking at them, whereas I just needed to get them better because everything has winning trades. I mean, it doesn't, if you have no indicator and you don't even have a chart, you just push buy or sell randomly, you never looked at a monitor, you'd still have winning trades. Isn't it true? Well, if that's the case, then isn't it the same for everything? So the differential is there an edge in any process over a large sample size in a random environment? And because everything is random in the sense of the rotation, this is random. This here to here is random. Is this going to come down to here now, or are we going to go back up here? That's going to be random also. So if we know it's random, then all we can do is participate at locations that and where we understand the behavior. So the indicators, for me at least, are not part of this. Now, I'm not saying you can't use them. You can. But does it make sense? If you understand how the market works, then you can deploy an indicator. And you'll know when it applies and when it doesn't. Certain processes apply under certain conditions. And using the same process in a different condition will get you in a world of hurt. With indicators, it's pretty much trying to have a generic process and just it's a plug and play. This is not plug and play. This is not like installing a software tool and then it's all set to go. It don't work like that. And I think many of the software vendors kind of suggest that's all you have to do. So you open up that software toolbox, your higher time frame toolbox. There's over 100 indicators in there. Now it's, oh, this is great. And then you spend your life trying to find the right mix in time frames. Now that might work for some. I'm sure it does. Most retail traders have an abysmal success rate, and I believe that's because that's what they do. And I just don't think that's sustainable for most. There's always exceptions. You might be the exception. I wasn't. So I had to kind of come up with a different understanding of how the market works. It wasn't my translators, my indicators. It was really learning to understand really what is this all about. And then can I put it into, is there a way I can define it? And if I can define it on a conditional basis. See, when I built trading systems, they were based on conditions, or call it branch logic. So if this, then that. If not, then what? So if the condition existed, then you go down a track, if you will, a branch with specific steps or setups, and then triggers, and then trade management, and then targets. All of that was conditional. So my job is to narrate the condition and then anticipate where the behavior might take place and then see what happens. And then if I read the order flow, it can tell me potentially a short rotation off of this back to here, or a long off of this back to there. That's all I know about this. I know the context is up. I also know we have, I think, a 10-year note auction at 12 noon, and at 1p we have the FOMC minutes. And I think the market already has sort of the lean as far as where that's headed. So, but you can anticipate long liquidation in front of the 12 noon Central Time, where we have that auction, which is pretty important. And in the meantime, this is our little sandbox. Hope that makes sense. Doomsman is in the Trader Lab is asking me what if we keep going, where would the targets be? I don't have any targets up here. When you get up to something like in this kind of condition, the auction, we haven't been here before. So we are very much in the present because this is the current auction. You can do things like go to 2 times IB, 1.5 times the initial balance. I mean, when you have nothing, you have nothing. You could try a Fibonacci extension. You might as well just throw something at the wall because it's just a guess. So and then it's trade management. So for me, once we're at all-time highs, this is the current, this is new territory. So it's the present. So if I'm sitting long, I just manage the trade, but I wouldn't be. I would tell you right now, I have nothing here to do at this point for me. So I'd be done. And if I'm going to scalp, which is a different trade plan, in other words, start operating in this kind of stuff, this is okay. There's enough range. I can operate in this, but I don't necessarily have high level of motivation for it because I can take a day that's been really good, and all I got to do is start taking a few stops, and then I'm starting to throw dollars out the window. So I'm not compelled unless I have a specific plan for this, not all-time high, but this range, and then I can operate in this. So what's better for me? To be a buyer because the trend is up, or the market is long, and do I want to be a seller to catch the longs out? You see, which is the right thing to do? Well, what is the plan? If I'm above all-time highs and I just came back to check it, I think the long side makes more sense. Here's the resistance, and then the next resistance is up here. So is longs. So for me, I would probably, and I'm not making trade recommendations, be leaning on the long side, but I can tell you that I know the other part of this is, and write this down, the market goes up to go down, the market goes down to go up. What did the market do this morning? The market went down to go up. What's the condition now? The market has gone up to do what? Well, either continue higher because we're above all-time high, or go down. Now, down doesn't mean down, the end of the planet, I don't think, and I don't know. But if the market is long, that means the sellers are below the swings. What's easier, new buyers or take out the longs, weak longs? That's a question. So it's either long out to here or shorts, and then you're looking to come back inside. If we come back inside, then you're going to start coming back to other locations. And I can tell you where they might be. We can come in here. We might come back here. We might come back to the IB. Then the possibility exists for longs off the IB for rotations up. So those are structured trades and trail apps. So you're above the all-time high. I don't think shorts would be a good idea. I do think at the moment the context is up, and you got to be thinking the longs. If you fall out here, then the possibility is to squeeze out the longs. That's it. Hope I answered your question there. Well, repeat, if you're going to post that, then maybe you should do that. Repeat is mentioning Linda Rashke, who says keep buying all-time highs. Well, my take on that is have a plan. Don't buy anything unless it fits your plan and you have a risk management process and a scaling process to get risk neutral. I have a different take on that. That's a rather broad statement. How are we doing in YouTube, guys? By the way, if you're in YouTube, please give a thumb up or a like. There is a link in the bottom of YouTube. If you're interested, you can visit the Bookmap Discord Trader Lab community. There is no cost. There's a library of webinars on what you're seeing here every day in the stream, plus 60 PDFs that actually show these and many other structured trades that you can take a look at, reverse engineer, make them your own. Trading is a statistically based business from what I have found. It is based on gaming. So if you understand how casinos operate, they operate in a completely random environment like we do. The only thing they do is play their games exactly the same way with anchored inputs. They don't change anything. We, as humans, are emotionally triggered. We change everything. Bail out, skip trades. If you have pain from the last loss, you skip the next trade. Well, the casinos just deal the next hand. You don't see them skipping or changing the game because somebody walked out with cash on the last hand. They don't change blackjack to 10 cards. You know what I mean? So we aren't doing that. We are doing something that's triggered by emotions. Why are they so successful and so many traders are not? The difference is they only play games that have statistical edge and they don't change them. We do exactly the opposite. We make it up. We play a video game. We have no rules. We have no structure. We have nothing. And we certainly, most of us, do not trade with a statistical edge. So we can't even tell if what we're doing even has the chance to be profitable over a random distribution of outcomes. Is that you? I hope not. But if it is, that's common. In fact, that's most of us at some point. And we might not even be aware of it because everything works at times. Like I say, if you had no screen, no chart, no nothing, you just push buy or sell, you'd have winning trades. That ought to tell you something. So even though we see structures and things that look pretty good, and then we spend a lot of time curve fitting them so they work a little bit better, they still, if they don't have an edge over a random distribution or a large sample size, they're guaranteed losers. It's just how long does it take? So that's our business. Might not be what you think it is, but that is one way to look at it from a business model point of view. So let's see what we do here. Now, these streams are typically available only to Bookmap Discord Trader Lab participants. Remember, the Trader Lab is a no-cost community. It's open to everybody. You don't need to be a Bookmap subscriber. There is no cost, but I would suggest that you get your hands on Bookmap. You get the free digital version because if you are a quote subscriber, and you can be a subscriber if you get the free digital version, you then can attend the Bookmap Academy where you can get mentoring and coaching by other professional traders. You can attend the subscriber only webinars and training sessions and a lot more that is really only for subscribers. I kind of see it as kind of a loophole because you would be a subscriber. So get your hands on that if you haven't thought about it. And it's a digital version. It doesn't have all the bells and whistles, but it lets you kind of look at it and kind of start looking at it compared to what you look at on your other charts and see if, now you have to learn, like every tool, what it means because there's none of this red light, green light indicator stuff. I mean, there are tools you can deploy that are in Bookmap, that you can use that will measure different things in the order flow, of course. Uh, and that's up to you. You'll find what speaks to you. You know, I personally, I'm a minimalist. So, and I used to be a maximalist. I don't know if there is such a thing, a maximalist. And that's how I ended up with trading systems because I had so much math and derivative, quote, indicators that I created that it had to be systematized and optimized. So I went into the maximum. I was at the opposite extreme. And then it took me a number of years to remove everything. So, and I went the other way. Now, if I don't need it, I don't want it because can I read this here? What can I see? I see the sellers are here, the buyers are here, the buyers are here, the buyers are here, sellers are here. If I stay above this seller, then we're going up. Sellers are here. If I get above him, we're going up. If I can't clear this guy, I see the buyers are above, we're going up. That's all I need to see right here. My resistance is sitting here. My micro high volume is right here. So let's look at this. This is buyers are here, buyers are here, buyers are here, sellers are here. These guys are under the bus. The buyers are here. Where's my indicator? I don't have one. Where's my resistance? Here. Why? Let's go back. Try to remember why. I think it was here. So if I'm in a trade, what I can do with this is I can read this. Here I can see sellers are here. Sellers are here. By the way, sellers are here, buyers are there, buyers are there. How do I know there's a buyer here? Well, I don't know until I see this. And then I'm above these. See, the buyers are here, but the sellers are on the other side. They are absorbed. That's the limit order book. And you can't see them. Buyers are here. Sellers are there. Buyers are here, buyers are here, buyers are here. I'm above these sellers, that seller. So this suggests higher. Resistance is here. Why? Because the sellers are here. Sellers are here, sellers are here. Get above, buyers are here. Sellers are there. So I can use this any way I want. What I typically like to do with this is if I got long here, I know resistance is here. I'm going to scale. Then I know this is support down here. I could keep my stop under here and then or let me put a little line here. So what I know is in this right here where this volume is was basically the buyers are here. So support is in this area right there. Let's look, see what happens. Don't know. Why? The buyers are here. The buyers are here. If I take a long, I could be trailing under here. Let's look at this location here, here, here. We're just going to watch it. Now, these are not trade recommendations. What I'm trying to show you is how you can narrate this. So subject to the time frame or fractal I operated, I could be doing anything. I could be long here. I could be scaled here or here. I could be holding a long for the moon. Who knows where? Stop is under here. Volume is here. The pull's back here. It could be a long back to here or even here. I'm not saying it is. I'm saying is how I read it because I'm using a combination of volume, which is what this is about, that high volume node, and I'm using order flow, which is showing me right here where the buyers are. And once I'm above here, buyers are here, high volume is there, I break high, where do I come back? You'll notice here, see? Does this make sense? Can you guys see this? For lot, Tony is asking me, looking at the days, trying to vet older days and trades, but really, he's asking me what time frame to use for a higher time frame. Well, for me, the intraday developing time frame, I use a 6-tick Renko because I don't believe in time. So for me, it's the price action. If it takes an hour for the S&P to move, a point, then it's not going to print. It's going to take 6 ticks before I have a bar. So I use Renkos just to see the broader stroke. But I'm looking at this, but it's easy when you're using Orderflow, you're really down, I call it the tip of the spear. I'm going to look at this, but I don't want to lose sight of a higher time frame. I mean, when I was using time-based charts, 15-minute was pretty much what I thought of for, at least when I was, trying to remember. When I first started doing intraday analysis, because early on in trading, we didn't have it. It was day, So for me, breaking down 15-minute into 15-minute increments was like, that was like almost a scalping kind of a thing, from a time frame, because we never had that. So, and don't forget, I started in 1980. So I went to 15 minutes and we didn't have any of this. There was no order flow, no DOMs, no internet, nothing, zero, no computers, really. It was terminals early on. So, 15 minutes. So I found, once I got away from time, and Renkos became available. I use Renko. I just like it because I don't want to have bars going across a chart when there's no reason for it. Why do I just want to have a series of bars if there hasn't been range? So the Renkos just eliminate the noise and let you see the structure. So for the ES, it's a 6-tick. Renko, I have used 4 ticks. I have used 2 ticks. Before I had Bookmap, I would actually use 2-tick and 4-tick Renkos as my trigger charts. Because this process, I've been using this, I don't know, 2000 something, 7, 9, somewhere in there. I don't remember anymore. So I've been doing this a long time before I had Orderflow. So I did it with Renko charts. Because the same things I see in a Renko, I see here. Except the difference is this is right here, right now. The Renko, it would be much later. Even if I went down to like a 2-tick, then there's just more noise. So I've taken what I did with shorter term Renkos, and I've really kind of morphed it over into Orderflow. Because with the Renkos, this is resistance. And that's resistance. So with the Orderflow, I'm seeing it even quicker than I can see it in something that, while this is developing, I can anticipate it. So, but I have the location here. I get the buyer here. Right here, I have no idea. When I see the seller below the buyer, then it's hasta la vista, down potentially to the support. Where's the support? It's under here. If I break under here, right here, we can then break down and, this is scalpy. For me, this would be like, and I'm not a scalper. I don't believe in it. I have done it. I have been a high volume trader many years ago. And it was in the NQ. It wasn't in the ES. And it was during the dot-com bust. So 100 trades a day, that kind of thing. Different business. And I wouldn't do it again. But, and it's not because I couldn't do it. It's just what it requires from a cognitive point of view. And it's easy to get fatigued, get myopic, and it doesn't take a lot to make mistakes, and subject to the range you trade in. There's just a lot of variables to it and a lot of cost. So I had to make a decision many years ago to either get a membership so I could reduce my costs. I was going to lease a seat, came really close to it, to keep because of the volume, or change my time frame. And I figured I'll change my time frame. So I upped my time frame, reduced my frequency of trade. And over time, it got less trades and less trades. Because the thing about it is, where are the dollars made in trading? And this is just an individual thing. For me, it's in the swings. So if I can get on a trade that has, 8, 6, 8, 10, 20 points, that's my objective. I don't need a lot more than that. If I take a long here, I'm just going for this. Well, do I want to trade, for 4 points? I'm not in the business of 4-point trading. If I get long here, where am I trying to go? You see, it just not here. I'm not in the business for that. I can read it, but why would I put risk on? Here's the thing about risk. At least, and again, I'm only talking about me. I'm not saying what's right for you. My risk to take a long here to go here is the same risk. It doesn't change to go from here and to get a 20-point trade. If I don't have structure that suggests to trade here, I'm not going to put a trade on. If I want to scalp this, I have a different plan for it, or I don't trade. I'm not saying I can't trade, but now if I come under here, remember, market goes up to go down, the market goes down to go up. This morning we went down, now we went up. What does it mean? Possibly with the auction coming up in a little bit, we can go down from here. Not a recommendation. Do you see how it might work? Does it make sense? Cocobolo's asking me, would I place a limit at the IB high? No. I don't trade that way. I just don't put, I'm more of I want somebody else to step in, and I want to see structure and a rejection, and then I'll wait for a retracement. You see? So I'm not going to, like here. So if this is too high and I have a location, I break, and I see sellers here, I pull back, and this is too high in the microstructure, I would take a short here with a stop here. I would not put an order there. Now if this is support, then if you put a limit order here, your stop's got to be under here. And then this is your resistance is here. But I would not put a limit order. Right here, you have a buyer and you have your sellers. So let's watch right here. So why would I put a limit here if I know I'm right here and the market's long? That's why I can't put an order anywhere until I get a retracement. So I want to see here, for example, be a buyer, a test, and then when I see the order flow, then I would enter, because I don't want to try to pick anything. I'm not any good at that, so I don't do it. But let's remember what we were talking about. Market goes up to go down. Market goes down to go up. Market went down to go up. Market can go up to go down. If I get below here, we got a lot of longs, and we got the auction, right? The 10-year auction at 12 noon Central Time. That's 6 minutes from now. Do you want to be long going into the auction? No. What do you want to be? Flat or short? That's up to you. I mean you, the generic you, not you, Coca-Cola. How are we doing in YouTube? Guys, please give a thumb up if you're visiting in YouTube. This is Trader Lab. This is structured trading. It's really all trade plan specific. So you would know what you're going to do before you do it. And how is this? Suppose you're sitting here. You don't have any trades here. What is compelling you? Oh, I could have sold this. I could have sold that. Is the coulda going on in your head? How about this? If you don't have a plan, how about you shoulda not do anything because you don't have a plan? Then you're just gambling. And I always say, if you're going to gamble, go to casino. Make sure they give you the cocktails and the ticket to the buffet. Because when you're in the business of trading, your job is not to gamble. Your job is to take intelligent risk that has a statistical edge. That's it. If you don't have a trade here, you got nothing to do. And there are traders who are selling this. You have longs who are liquidating, and you got new shorts coming in here. Both are correct. But if you don't have a trade, you got nothing to do. You sit in the Barca lounger and you hang out and you go, this is interesting. And then you take screenshots and you think about it and you go back and you say, is this a trade that has an edge or is it just random? Is this a short right here? Is it? Or is it just random? What is this right here? Let's watch it. Not a trade recommendation. You got buyers here, sellers there. The resistance is really here and here. Let's just see what happens. And I'm just about out of time. Please give a thumb up if you're visiting. This is the Trader Lab. I'm going to make this stream public so you guys will be able to get it. There's a link in the bottom of YouTube if you're interested in visiting Trader Lab community. There's statistics that are available to you, a library of webinars, 60 PDFs of these trades. You can see the behaviors. I'm not a vendor. There's no cost for this. And the idea of Trader Lab is a community of traders. And the idea is to build out the business of trading. Trading is a business. There's cost and overhead in all businesses. For us, it's losses. We take them. We pay bills. So do the casinos. Buyers are here. Sellers are in here. So let's watch the behavior. None of these are trade recommendations. For me, I have no trade. Just a tourist. But what I like to do always is narrate. What happened here? Sellers are here. Sellers are here. We broke below. Buyers took a shot here. Sorry, Charlie. So right here, the sellers are in control. And this microstructure right there is too high, right here. So too high, seller. Buyers are here under the bus. So we can pick this right here. Sellers were there, which is there. And then resistance is here. So this is not a trade. This is just structure. And if you understand structure, you might be able to do something with it. And then it's alignment with this as a chassis. This is too high. Outside edge of a consolidation. What's this down here? Outside edge of a consolidation. Let me do something here for you guys real fast. I'm running out of time. Please give that thumb up in YouTube. Let's just look at this. Whoops. This is a consolidation. This is where the high volume is. We broke out. This is the outside edge. High volume is here. Now, if I go to microstructure, the volume is here, and then the volume is here. And these are not shorts. This is the structure. So you can look at this. Please give a thumb up in YouTube. Appreciate you guys stopping by the Trader Lab today. I've run out of time. Come to the Bookmap Discord Trader Lab community. Like to see you there. Say hi. And if you're interested in the business of trading versus the fantasy, I think you could really advance your potential career in the Trader Lab and all the other education that's available in the Bookmap Discord server, including the Bookmap Academy for coaching and mentoring for Bookmap subscribers. And don't forget, there is a free, no-cost digital version of this, of Bookmap that you can get your hands on so you could take a look at it. Thanks again, guys. Thanks for visiting the Trader Lab. Remember, where were our sellers? Here. Where's our buyers? Here. So resistance, resistance, support. And the support is there. There you got it. That's all there is. And that's, I think, all you need. And a trade plan that has a statistical edge. Thanks, guys. Don't forget the thumb up, and I will make this stream available publicly. Typically, they're only for Bookmap Discord Trader Lab participants. But I think this is something everybody should have a chance to take a look at. Thanks again, guys, and don't forget the thumb up on the way out down at the bottom there.